Good evening, everyone. I'm Susie Garrow.
And I'm Bill Griffith in tonight for Tyler Matheson. The books are nearly closed now on the month, the quarter, and the first half of the year. Nearly, but we got one trading day left. It appears there will be no June swoon this year. And that's saying something because over the last 15 Junes, the Dow has been positive only 5 times. As for today, stocks clawed higher in final hour of trade to turn around and end the week on a positive note. The Dow gained nearly 6 points. The Nasdaq rose by 19 again, and the S&P tacked on almost 4. But for the week, the Dow and the S&P were down slightly, while the Nasdaq continued its climb higher. The quarter is a story unto itself, with all 3 averages looking like they will end solidly higher. But as with the market, some areas have stood out more than others. And as Dominic Chu explains now, a little bit of research goes a long way.
The second quarter is shaping up to be a decent one for the stock market. While the broader S&P 500 is up nearly 5% since the end of March, industry groups like biotechnology, tobacco, and computers have all posted much higher returns. That means if you took some time and were lucky enough to invest in these types of stocks, you'd be having a great quarter. Many experts still believe that doing some homework and picking specific parts of the market will pay off for investors.
This year, we think it's more about the return of business spending as businesses feel a bit more confident, do a bit more hiring, and even build more factories and offices. So we're looking towards that as a key driver. This benefits in industries or companies in the industrial sector and the technology sector of the stock market.
The market is currently in a state of flux. And sometimes stocks can be beaten down enough to create attractive buying opportunities. Take a look at shares of Apple, fresh off a stock split that made the shares more affordable for many investors. After losing around 45% of its value from record highs back in September of 2012, the stock has shot up by 66%. Or cosmetics giant Estee Lauder, a stock that dropped around 16% off its record highs late last year, only to bounce right back and hit fresh record highs this year. Both are stocks where investors were rewarded for buying on a dip in value. Bullish investors think that there's still room for the market to run even higher.
There's still some good growth ahead for earnings for U.S. corporations. That's really the lifeblood of the stock market. And as we look to the second quarter in particular, we're likely to see some pretty good results from a wide variety of companies bouncing back from what was a pretty lackluster first quarter owing to the weather effects.
If that were to happen, the current long-term uptrend for stocks could remain intact and drops could be buying opportunities. But the more pessimistic out there say we're still long overdue for a significant stock market pullback. For Nightly Business Report, I'm Dominic Chu.